Good morning. Thank you. Uh, that shows at least the being listening capacity is on at the beginning. Uh, See, I think it's a day where we are saying it's an accounting standard day, and therefore, my first job is to inaugurate, and let me therefore start by saying I inaugurate the day and the program for Accounting Standard Day, because sometimes in the course of talking, one might forget to say that sentence, and that is missed out. Uh, Before I begin, let me know how many students are there. Can you? Thank you. Because I might say something which, as a student, you might find slightly difficult to digest, but that's part of my job. That way, I'm also a student, so don't worry. uh, See, I think the point is, the name is Institute of Chartered Accountants of India. It is not Chartered Auditors of India. Let's start from that point. So basically, we have to be accountants and then we become auditors. And I look at the Accounting Standard Day in this fashion. And therefore, maybe next 30, 35 minutes, which I have, the topic given, of course, is Accounting Standard Day, ASB, current jobs on hand. But I think that I can finish in 3 minutes, because all that is available on the website. And I won't like to repeat what is available on the website. Just now mention was made about AI. I think AI cannot take emotional intelligence. AI cannot take original intelligence. And therefore, while we use AI, one should always keep in mind that the original intelligence, if it is alive, then AI useful. If original intelligence is not alive, AI will not make you think. AI will give us all the data which will enable us to analyze. But the analysis has to come from your own original intelligence and emotional intelligence. I thought today I'll spend some time to deal with the subject of accounting. And I think, as you rightly mentioned, all of us are students of accounting. I've been a student, I think, now for last more than 50, 60 years. So from that angle, let me touch with the subject. There was a time when the accounting was learned only from the textbooks, which was like Shukla Grewal, Chakravarti, Pickles, old timers would know the book. Then came the series of books by Krishna Dwala, Shetty and others in the college level. And then came the accounting standards. So accounting standard is not something which has been existing with us for a long time, maybe 40 years, 50 years, that's it. Then the accounting standards were formulated. Initially, they were recommendatory. Then the institute came out with the first concept of tax audit, and there it said, even if the law does not make it mandatory, the auditor should consider them to be mandatory and start reporting where they are not complied with. So the institute had to communicate to the government of India at a very appropriate level to say that let the accounting standards become mandatory, and then became the position where they become a part of the Companies Act. Now, this is just a history. I won't spend time on that, but this is just a history that then they become part of the Companies Act, whereby it was stated that the companies will have to prepare accounts as per accounting standard, and so on and so forth. Initially, there were accounting standards which were formulated in India. Then there were international accounting standards, and there was something called as US GAAP. So we had 3 series of standards in a way known to the people at large. Accounting standards as formulated in India, international accounting standards, and US GAAP. Now, at a very global level, the international accounting standards and US GAAP, both being powerful people, would fight with each other, would never agree. And then came a time where it was thought appropriate that what should come out is something called IFRS, International Financial Reporting Standards. Now look at the difference. The word accounting standard would in a way constitute the fundamental of accounting. The International Financial Reporting Standard is a financial reporting standard. So by the name itself, it includes something more than accounting. I think in case you think of a subject from the angle of why, then how, all these thoughts can come to your mind. Most of us, when we learn in commerce, we try and learn how to do something. I think what is important is to know why we do something. The moment we try and learn why we do something, I think the learning becomes much easier and the learning becomes much more meaningful. That's the only point from which I'm trying to explain the niceties in the various words which are there. So then came the IFRS, then came the IFRS standards. At that point of time, the Prime Minister of our country made an assurance in a public forum in some international level saying that we will adopt them. Then came the position that as a country, the institute decided to adopt IFRS and we converted them to Indian accounting standard. That's how I think Ind AS came in. Now, instead of adopting completely IFRS, the institute thought we may have to consider them modified to the extent of the legal requirements and practices and usage. There are very few variations which have been done, but that's how the Ind AS is marginally different from IFRS. I think that's the whole, you can say, history or evolution of accounting standards till now. The Accounting Standards Board of India is a powerful body within the institute. The chairman of ASB as of today. Now let me come to the current position. Ex officio becomes a member of NAFRA, which is the highest body. So the president of the institute, the chairman of ASB, become the member of NAFRA. This is a public program and therefore I have no comments to make on the process per se. I'll keep on only sharing information as far as these subjects are concerned. The Accounting Standard Board, as a country, what we have been doing is, we look at the international standards, we look at what modifications are required to be done over here, then those are announced for the comments by the public. And when we say public, it is all of us at large, industry bodies, other organizations, etc. The response received is considered by the institute, then they formulate the standard, then they recommend it to the NAFRA, earlier it was NACAS. So now they recommend to the NAFRA. NAFRA reviews the standard, then it recommends to the Ministry of Corporate Affairs, and then Ministry of Corporate Affairs issues the accounting standard. I think that's the whole process. So what is expected is, all of us as members of the institute, when we receive exposure draft, we are supposed to be looking at it and commenting about it. The real life experience says that normally most of us say, look, we will worry about it only when it is finally drafted. Why worry about it today? So the comments received from the members on a draft are absolutely minimal, absolutely minimal. So my first thought and the request would be, many of us need to spend time when the draft is announced for comment. I think if we spend time on that, we would understand it better. And if we have got something to state about it, we will have the opportunity to communicate to the institute, kindly consider this thought process. But that's a thought process. Now then the standard gets published and then it becomes a part of accounting standards as formulated by the Ministry of Corporate Affairs, pronounced by the Ministry of Corporate Affairs. Initially when the Ind AS started, there was a big distinction between the Indian GAAP and Ind AS. That means Indian GAAP is a word that we use for the standards which have been prevailing in the country in the past. Then came a time when the institute thought it appropriate to modify the Indian GAAP standard to a great extent, and now more or less, except for few differences, they are in tune with each other as far as IGAP and Ind AS are concerned. There are a few points of distinction which I'll cover, but most of the details they are covering commonly. I think that's the evolution of accounting standards in India. As of today, Companies Act lays down very clearly to which corporates the Ind AS will apply. Those are listed companies and the companies which are about to be listed and the companies whose net worth is 250 crores and above. So it is not as if only listed companies have to follow Ind AS. All companies whose net worth is 250 crores and above as at the end of a particular accounting year, they have to follow the Ind AS. Now that's a point which is important enough for us to remember. For all other companies, it is the IGAP which is applicable. When you come to banks, etc., for banks, Ind AS are still not mandatory, so IGAP remains compulsory. But if you look at non-banking financial companies, since they are basically companies, the Ind AS is applicable. I think other organizations like proprietary concern, partnership concerns, LLP, charitable organizations, IGAP is compulsory. I think broadly that is how one can look at the position. The next topic given by the institute was what are the current topics. I would better request you to look at the website and understand that. I also copied from there only. There seem to be only 3 or 4 on site. One is the insurance contract, which is Ind AS 117. It has been already notified by the MCA to be put into practice. So those of us who are in the audit of insurance company business should study this more carefully. The next one is Ind AS 118. It is presentation of financial statement. To me, this will be most important because that is what all of us are really connected with. And I think the exposure draft period is still open, so we can look at the standard and give our comments. The next is Ind AS 119, subsidiaries without public accountability. Now this is a new concept. Even I am not sure about what the concept is, but that's what the standard says. Subsidiaries without public accountability hyphen disclosure. Now that's the name of the standard. That is also an exposure draft currently available with the Accounting Standard Board. Then it is considering bringing out a separate set of accounting standards for LLP, limited liability partnerships. And there are various amendments to certain standards which are, it says small in nature, are being considered. So frankly, I think this is where the topic given to me by the institute gets over. My job really gets over. But I thought having come over here, let me spend another 25 minutes or so to share with you how do I look at the subject more as a student of accounting. And therefore, quickly I'll make a mention of a few points, give my thoughts, and it might raise some questions at the back of your mind. And I'll be very happy that if those questions are raised by you at your heart and you think over this. The first point is, in a country like India, when you start celebrating day, it indicates that you have forgotten the fundamentals. We started with Mother's Day, Father's Day. Till that time, we never had to follow Father or Mother Day. They were the basics in our life. But then came the onslaught of foreign countries where we started doing Father's Day, Mother's Day. I think some other time Brother's Day will come, Sister's Day will come. So I still feel when we fall following Accounting Standard Day, have we come to a position where in the normal course, we are forgetting accounting standards? I won't have an answer, but I think all of us as accountants need to remember this, that the institute does not have to tell us that, look, today is the Accounting Standard Day and therefore arrange a program. 27th April is the day, but that's not convenient, so do it on 3rd May. Institute telling is not a problem, but that does indicate the frame of mind in which all of us are living. And I think I would purposely tease that frame of mind and say, look, go down to your basic thinking, look at your heart, and I have some other comments on this, but I think that's my first comment, that the day we start celebrating a day, to some extent, psychologically, we believe that we are different from that fundamental. And as a chartered accountant, if you are different from accounting standard, then I think our future is questionable. I think that's the first thought. Second thought is, some of these are very small issues. Is it an art or a science? Accounting, is it an art or a science? To me, many people have made it an art. I will have some comments on that. It's certainly not a perfect science, but it's somewhere in between. It can be called something called social science. And why do I say that? If you look at the accounting standard, there are some standards which are principle based, and there are some standards which are practice based. A standard like earning per share, what is the fundamental that it lays down? It only tells us how to calculate earning per share. A related party transaction, what does it tell us? It says if something is identified as a related party, and in the country there are different definitions which prevail, Companies Act, SEBI, LODR, income tax, all this you have to keep in mind, and then there is a transaction, rather standard called related party transaction. So broadly, if you look at the standards, they can be divided into two parts, principle-based standards and practice-based standards. Principle-based standards in the olden days used to lay down a principle and the standard will evolve out of it. With Ind AS, even in the standard, there are sometimes options which are available, and those options one has to make a choice of one of the options. Now that's what I will call it to be a social science. And some people convert this into an art. We will come to that slightly later. But please keep thinking about it and find out your own answer what it is. IGAAP versus Indian Accounting Standard. Fundamental differences. Indian accounting standards look at fair value as compared to the cost. The IGAAP used to be only on the basis of cost, whereas when you go to Ind AS, there's a substantial portion of it which is going to fair value. In want of time, I will not be able to take many illustrations of that, but I think that's the difference. And secondly, substance over form. Now, those of us who have remembered the books very clearly will know that substance over form used to be there even earlier. But there, the law superseding the standard was considered as final. But with Ind AS, substance over form has become so important that in consolidation of accounts, a relationship between a holding company and subsidiary company, if A Limited holds more than 51% shares in B Limited, in IGAAP, it is definitely a subsidiary company. But in Ind AS, one has to look at the actual control in the transaction. One has to look at the shareholders' agreement. One has to look at the articles of association and see that even if A holds more than 51% shares in B Limited, if by shareholders' agreement B Limited has got control over the transaction, then B Limited does not become a subsidiary of A Limited. It remains to be an associate. So mere shareholding held for more than 51% earlier would have made it to be a subsidiary under the IGAAP. In Ind AS, it does not make it to be a subsidiary, so one has to look at substance in the matter. Similarly, there might be a company A Limited which is holding only 25% shares in B Limited, but by shareholders' agreement, if A Limited holds the control over the operations of B Limited, then it becomes a subsidiary company. I think that's the substance over form. The next topic that I would take is conflicts between Ind AS and law. One of the major conflict is in Ind AS 8. Ind AS 8 says that in certain situations, you can restate the comparative figures of previous year. I don't know how many of you keep on reading the annual accounts of balance sheets which are published, available on the website, but please make that to be a habit. That is the greatest learning today for accounting standards. You can learn both how to do something and how not to do something. In learning, it is always important to know what not to do, just as you should know what to do. So I am not taking name of any company, but please keep reading the annual accounts of companies and it will teach you both how to do something, how not to do something. Let me come to the conflict. Ind AS 8 says that you can restate the figures of previous year in certain situations, and it lays down what it can be. Now you look at section 130 and 131 of the Companies Act. Those who have done that would recollect that quickly. Again, I am saying for want of time, I am not elaborating the facts. But broadly what it says is, in case the Government of India or any government authority considers it necessary to reopen the accounts of certain company, then following the procedure given under that section, it will ask NCLT to direct the company to reopen the accounts. The accounts for the last 5 years will be reopened and they will be represented, re-audited, so on and so forth. This was a new concept about 5 years ago, but from 2018 or 19, I think a number of companies' accounts have been reopened. If you keep on reading the newspapers regularly, you would know the names of companies also. Now that's the compulsion to reopen the accounts. There is also another section 131 where the board of directors, if they feel that there is something incorrect in the accounts of the previous year and therefore they wish to reopen the account, they also can go to NCLT and request them that they want to reopen the accounts. That also has happened in the country. Boards of certain companies have gone to NCLT and the accounts have been reopened. Now that's section 130 and 131. And then when you go back home, please read Ind AS 8. Ind AS 8 permits you to restate the accounts of previous year. And there's a large PSU of the country which has done it for the year ending March 24. Those of you who feel interested can read that. It has practically restated the accounts of the previous year, by which the net worth of the company has gone down substantially. And that is still valid. Section 130, 131 is also valid. Now, as a student of accounting, I don't know which one will prevail. The knowledge, as we know, tells us that the law will prevail. Now, what is the law? The law will be section 130 and 131. The standards are a sub-regulatory part of that, because the standards are coming under the rules. The accounting standards rule notify the standard, and therefore what is given in the section would prevail as compared to what comes out of the rules. But I just thought that this is one situation that prevails today. And just as I said at the beginning, I don't have answers to this, so I thought let me put it across to the those of you who are interested to look at them. The next topic is more prominent. Yes, please. No, no. In the Ind AS, yeah, I'll explain that. I think the question is, general understanding is Ind AS overrules the company law. The answer is no. The clarification is given in the rules itself, saying that wherever there is a conflict between the standard and the law will prevail. That's what it says. The distinction which I brought out about holding and subsidiary company, to some extent, I get your point. The standard has already overcome the law, but that's the situation today. The next point is, in the olden days, that means up to year ending March 23, we used to give significant accounting policies and then the notes on accounts. Then came a change by which we were told from 1/4/24 that we have to give material accounting policy information. Earlier it was significant accounting policy, now it's a material accounting policy and information. Question is, fundamentally, is there a distinction between the two? If one studies the accounts of Indian corporates in the last year, one finds that India as a country has found no difference between the two. Pardon me if I say something more than on this subject today, but significant accounting policies by and large were complied with when you are practically reproducing the contents of the standard to the extent relevant to the company. When you say material accounting policy, the expectation is within the standard, if there are two options available, for a major part of the implementation of that in your company, if you have adopted one choice, you need to give that choice. Now, please go back and check how many companies have shifted to material accounting policy information. What has happened is the contents are same, the bottle only has changed. I think this was the next topic. A few more topics and then I'll finish, because the next session has to take care of many important things. If you look at the accounting standards, broadly you can divide them, or rather the contents, you can divide them two parts. Many accounting standards lay down what is to be done. Like the valuation of inventories will tell you that you can do valuation on first in, first out, weighted average, simple average. And it also tells you that you cannot do it on a LIFO basis. So the accounting standard very clearly lays down what is to be done and what is not to be done. So in a way, the standard tells us what is permitted and what is prohibited. The people who consider accounting to be an art convert this into choosing do something which is not prohibited. For the sake of convenience, I will not take illustrations on this matter. There are many of them. But when you choose something which is not clearly prohibited, it fits into two situations. what is permitted, what is prohibited, but this is something which is not prohibited, and therefore you can do that. Now the thin line between the two is very, very, very thin. The area of gray is really more gray, and that's where the topic of ethics and value system in accounting comes in. Ethics is not a subject which is only for 40 marks in the examination. At least when I passed out, I had only 40 marks. Now I don't know how many marks it carries in the examination. But that's not a subject which is only for passing an examination. It's a subject with which you must be able to live. The accounts that we are preparing, either as an accountant or certifying as an auditor, are ultimately meant for the shareholders. And most of us are fundamentally shareholders, citizens of the country. Then we happen to be professionals, either accountants or auditors. So the moment we go by to the fundamentals of ethics and value in accounting, what follows are the series of frauds which the country has seen over the last 25, 30 years or maybe more years. And with each fraud, what we get is amendment to the law. So naturally, there are some people within us who have been contributing to the process where they give up the ethics, and what comes out is the creative accounting, art in accounting, and so on and so forth. The next topic is items like off-balance sheet items. Derivatives, internal trading, I won't take the name of anything, but that brings out the problem. Now, in accounting, normally it is supposed to be that you are doing an accounting transaction or you are doing a commercial transaction. And at least I always believed that for a trade transaction, you need two parties. And two parties have to be legal. But then comes the word called internal trade. And the internal trade, we are told through the newspaper, has affected the balance sheet to such an extent that it had to be revised. So when we start with English misnomer words and we allow them to overtake our fundamentals of basics of logics of accounting, what follows is something like this. And that's what I would identify as an off-balance sheet item, one of those items. Now that is how these are intruding into the basics of accounting. And I think as a student of accounting, if we allow that to happen, we know what can happen. The real point is, all of us as accountants, do we have a sense of ownership about the standards? Do we believe that, look, it's my job to ensure that the accounts are prepared as per accounting standards? I think if we carry that sense of ownership, it will make a big difference. Some of the members of the institute, I won't make any negative comment, but I would say if they start ensuring the ownership of standards, whether as an accountant or auditor, it will make a substantial difference to the quality of financial statements which are produced. I'm not saying they are not good, but they can be still better. And those who are not doing good things at least can be stopped from doing those things. The next topic is, there is a statement called Conceptual Framework for Financial Reporting Standards. I don't know how many of us really read that thing, but that's like the motherhood statement for the entire set of accounting standards. The accounting standards lay down fundamentals, principles, practices of certain topics which are covered by the standard, whereas conceptual framework brings out the whole subject at a nutshell. Like if we have to answer a question whether something is an asset or not, that question is answered only in the conceptual framework and not in any standard. When you go back, please study the standard from this angle. The concept of accrual, which standard is dealing with it? 115 only deals with how to deal with when something is accrued. But when does something accrue? Our understanding tells us when the risks and rewards are transferred, it accrues something. But that's only in certain situations. If that was the case, where was the place for unbilled revenue? So the concept of accrual, the concept of standard, all these are coming out of conceptual framework. And I think therefore there is a need to look at that in a much better position. I think only two more. As I said initially, the Accounting Standard Board has got many things on the plate, and some of it is small amendments into the accounting standards. Now, this is something which I think as a student of accounting, I've been talking for years together, that if we keep on changing standards every year, it is not good for the country in the long run. Too many frequent changes. Every year, accounting standard being modified subtly, it destabilizes the basic faith in accounting itself. In days, if you look at the whole standard, now one book was not enough. There are 2 volumes of accounting standards. I read still books, so net, I don't know how many pages it occupies. But those of us who take the efforts of reading through the whole standard, can you tell me whether we remember English or whether we remember accounting? So the length of the accounting standard has gone so much that even for the accountants who want to study, who are serious in the subject, takes time before they understand and implement those accounting standards. And then comes every 1st April when there are some amendments. First, it is the accountants who have to understand it. They must be able to communicate this to the corporates. Corporates have to understand it, auditors have to comment on it, and then come the shareholders. Now, by the time they understand it, there is another onslaught of changes in accounting standard. Now, what are we doing? I think we are changing the goalpost of a game where the game is being played same way, but the goalpost is changing. Even if the changes are not many, I think to be precise about a subject, why can't we have the same standard for 3 years? If something was good in the last year, heavens are not going to fall if you do not change it in the current year. Because if something was so wrong, even last year was wrong. If something was not so correct, then even the last year was not correct. So what is the great advantage by having a change in accounting standard in a subtle way every year? And this is one point, even internationally, it has not been still accepted. People believe that they must make change. But ultimately, these standards are meant for whom? The standards are meant for the public at large to understand the financial statements. So I think there's a need for having a stability in the accounting standard. Yes.
Pardon me my ignorance, but I believe that Indian accounting standards are more like copy of the international accounting.
Absolutely.
So if the international changes, we can change it. Like that?
In real life, this is what is happening. The international, no, I agree with you. Let me come to that point. IASB, they normally hold one meeting in the country twice in a year. Being a past president, sometimes I get invitation to attend that meeting. Even in front of them, I made these points, saying that even world over, things are not going to go to a bad situation if you don't change the standard. So I agree with you that across the world, this is the temptation to keep on changing standard. But I believe that's not a good thing for ultimate public at large. All of us must always remember one thing, that we are a professional beyond a point, that we are first citizen. We are first human being. We are first investors. Then comes our cap of being an accountant, auditor, whatever it is. And therefore, I get your point. I've been making this point at that level. To take this topic, not you, sorry. To take this topic one step further, we are a part of the international community whereby we have agreed that we will take the accounting standard as they come over here. But I think now we are large enough to say that, look, you keep on amending, we will not do it. Now, somewhere we must have the courage of conviction to say that. I think that is something which, as a lone voice, I have been making every time. Let's see. See, we are the largest accounting body, actually. But we see, in most of the situations, we need to have a courage of conviction to say something. And I won't say a general comment, but many times our sense of tolerance is so high that sometimes we tolerate nonsense also very easily. I'm not saying this only for accounting, I'm saying this for all walks of life. As a normal person, if you don't agree with something, if you don't like something, why don't you make an appropriate noise about it at your own level? See, one person cannot change everything, but if tomorrow 100, 1,000, 10,000 persons start saying it, somebody who sits at the top will have to listen to that. But I think the topic is, a constant change in accounting standard does create a difficulty in the minds of the readers about what it is. And I think I can see the next people already here. So let me wind up by saying that in short, yeah, absolutely right. So ultimately, what is an accounting? An accounting is a grammar of business. As long as the grammar is pure, the results will be pure. If the grammar gets impure, the results are bound to be impure. And all of us as accountants need to remember that our name is Institute of Chartered Accountants of India. So the government, the country has given us the responsibility of saying that please ensure that the accounting is done properly. In our own way, question that I would leave is, are we making the conscious efforts to see that it is done that way? I think if we do that way, then naturally the accounting will lead to accountability. See, proper accounting will always lead to accountability, and the accountability will lead to something which is much more than what is actually desirable, and that's called credibility. Today what we need is, we need credibility to the financial statements, and that is possible only if we decide on an accounting standard day that we will not keep it only on the day, we will keep it throughout the year. There are some questions which I have thrown open because I did not have the answer. I thought all of you as students of the subject would take it to your heart. I'll be very happy if it has touched your heart. I'll be very happy if you are unhappy about what you heard. Because being unhappy only makes you start thinking as to what can I do about it. Constantly being happy about something only keeps you contented. So while one has to be contented in over a situation, one cannot be contented about the academic part of the topic that you are learning. And therefore, I think I'll be very happy if you feel that this is something which you don't agree. Please expose yourself to that subject and take it forward. Thank you very much. Thanks for the listening.